Good evening. This is your Northeast Asia market close briefing from AJP. Asian stocks extended their semiconductor-led sell-off on Thursday, even after Taiwan Semiconductor Manufacturing Co. delivered record quarterly earnings that easily beat expectations. Investors look past the blockbuster results, focusing instead on whether the AI investment cycle is beginning to slow after renewed concerns over data center spending. Record earnings couldn't stop the sell-off today. TSMC reported record second quarter profit, up 77% from a year earlier and well above forecasts, confirming that chip demand remains robust. But investors chose to look ahead instead of backward. Markets remained fixated on whether AI infrastructure spending can keep expanding after reports of delayed data center projects and rising electricity costs. Korea bore the brunt once again. Japan's semiconductor names followed sharply lower, while China's losses were broader and less concentrated in technology. The KOSPI closed at 6,818.35, down 466.06 points, or 6.4%, extending one of the market's steepest corrections this year. Semiconductor stocks remained at the center of the sell-off. SK hynix plunged 11.53% to 1,842,000 won. Samsung Electronics dropped 8.77% to 255,000 won. And SK Square slumped 12.23% as investors continued unwinding AI-related positions. The pattern of money flow barely changed. Retail investors aggressively bought the dip, while foreign and institutional investors continued heavy selling throughout the session. Ironically, the weakness came despite encouraging news overseas. U.S. producer inflation cooled more than expected, reinforcing hopes that the Federal Reserve can stay on hold, and TSMC later reported record earnings. But neither was enough to overcome fears that AI infrastructure investment could be entering a slower phase after Morgan Stanley warned of delays and cancellations in data center projects. The Shanghai Composite finished at 3,885.31, down 70.26 points, or 1.78%, slipping further below the 3,900 level. Unlike Korea and Japan, China's decline reflected broader risk aversion rather than a semiconductor rout. Among heavyweight stocks, Kioxia Mutai stood out, rising 0.83% to 1,261.45 yuan, and providing one of the index's largest positive contributions. Financials remained soft, with China Merchants Bank falling 0.4% to 37.61 yuan, while PetroChina slipped 0.7% to 9.95 yuan as crude oil prices eased after this week's earlier surge. TSMC's record earnings also offered some reassurance for China's domestic semiconductor supply chain, but investors largely stayed defensive ahead of upcoming earnings from mainland chipmakers. Japan's Nikkei 225 closed at 66,984.00, down 1,767.51 points, or 2.57%, with semiconductor shares accounting for most of the decline. The biggest loser was Kioxia Holdings, which plunged 14.23% to 62,700 yen, extending the correction in memory-related stocks. Chip equipment makers also suffered. Advantest fell 6% to 29,620 yen, while Tokyo Electron dropped 5.85% to 69,900 yen. The reaction highlighted an increasingly demanding market. Even after TSMC posted record quarterly profit of 706.6 billion Taiwan dollars, up 77% from a year earlier, and well above analysts' estimates, investors continued reducing exposure to semiconductor stocks. The concern is no longer current earnings, but whether the extraordinary pace of AI-related capital spending can be sustained into next year. Today's trading marked a shift in investor psychology. For much of this year, strong semiconductor earnings were enough to lift the sector. Now, even record profits are failing to reverse selling pressure. Markets are beginning to look beyond earnings and ask a tougher question. Has the AI investment cycle reached its peak growth rate? We'll be back tomorrow at the close to see whether investors regain confidence after digesting TSMC's blockbuster results or whether concerns over AI spending continue to outweigh record earnings. If this briefing keeps you ahead of the region's markets, subscribe and turn on notifications. Thank you for watching AJP.